So how does your personal credit score impact a business loan? In this video, I'm going to attempt to answer that question. Over the past few weeks, I've had times where the personal credit score impacted whether or not someone was able to start or expand their business. And I thought this would be a good topic to cover. With all that's going on in the economy, banks are starting to get very selective with who they want to do business with. As economic uncertainty continues, you're going to see even more scrutiny when it comes to financing. One of the best ways that banks are addressing this is by raising their thresholds on credit scores. The minimum credit score last year may have been much lower than it is currently when you're trying to obtain financing. Specifically, I'm going to go over how personal credit score impacts your business. Credit scores play a major role in determining the availability and terms when applying for business loans. When a business applies for loans, lenders use credit scores to measure the borrower's creditworthiness. They also look for anything on the credit report that would cause potential credit risks. Although this isn't necessarily a direct representation to whether the business will repay the loan, it's a pretty good indication on how people manage their finances. So there's several ways that your personal credit score may impact your loan. The first and probably the most important is loan eligibility. Lenders often have minimum credit score requirements that businesses must meet in order to be eligible for the loan. Higher credit scores generally increase the likelihood that a loan will get approved, while lower scores may result in a denial or more stringent loan terms. The second is when it comes to interest rates. Credit scores influence the interest rate offered to the borrowers. Businesses with excellent credit scores typically qualify for lower interest rates. Because the credit score is higher, they are perceived as less risky borrowers. Conversely, businesses with lower scores may face higher interest rates to compensate for the perceived risk. Credit scores can also impact the maximum loan amounts available to businesses. Lenders may be more inclined to extend larger loan amounts to businesses with strong credit scores, as they have demonstrated that they are responsible with credit, they know how to manage debt, and they are seen as less likely to default on the loan and more likely to repay larger sums. When it comes to the loan terms and conditions, lenders may offer more favorable terms to businesses with higher credit scores. These can include longer repayment periods, lower origination fees, a flexible repayment schedule, and fewer collateral requirements. Lower credit scores, on the other hand, may lead to shorter loan terms, higher fees, and stricter collateral requirements. When it comes to loan approval speed, businesses with good credit scores often experience faster loan approval processes. Lenders may have streamlined procedures for businesses with strong credit histories, as they are perceived as lower risk. On the other hand, lower credit scores trigger additional documentation and underwriting needs. They also more questions and scrutiny on the financials, things like that. This will all lead to a longer approval time. The other is access to different loan types. Certain loan programs or financial products may have specific credit score requirements. For example, the Small Business Administration or SBA loans typically have credit score thresholds that applicants must meet. While the SBA does often have lower thresholds than banks, the bank is the one that ultimately approves the loan. Lower credit scores or credit scores that don't hit the bank's approval may limit your business's access to certain loan options or force you to consider alternative financing solutions such as predatory lenders, and that's never a good idea. Now that we went over the impacts, let's talk about some of the issues on the credit report that sends up red flags. The first big one is late payments. If you had something like divorce or medical issue that impacted your credit score, be upfront with your lender. Sometimes a marginal score can be accepted for outlying issues like this. If there's no explanation other than you didn't pay, then it's probably going to be a decline. The next biggest issue is charge-off, collections, or bankruptcy. If the bankruptcy is discharged, sometimes that can be overcome. Again, if they were caused by one of the issues that I mentioned before, or if it has been a certain amount of time after the discharge, some of the banks will look on that more favorably. But again, it's going to be dependent on your own personal situation and the things that caused one of those issues. Lastly is going to be utilization. If, like most small businesses, you utilize personal credit cards to fund your business up to this point, then you're probably going to have an issue with utilization. Some of the notorious cards are the Capital One Spark cards or any other personal credit card from a small bank or credit union that says it's a business card, but it still reports to your personal credit. Those are going to be ones to stay away from. You can check out this video here where I reviewed both of the Capital One and the Chase card, but that's definitely one that you can get away from the utilization, is to apply for a card that does not report to your personal credit. If you can get approved for one of these cards that doesn't report, if you transfer those balances from, let's say, a Capital One to a Chase, now your utilization drops way down and your credit score is probably going to improve. To wrap it up, it's important to actively manage your credit scores by making timely payments, maintaining low credit utilization ratios, and managing your overall credit profile responsibility. Regularly monitoring and improving your credit scores can enhance the chances of you getting much favorable loan terms and conditions when seeking financing. As your business grows, it becomes even more apparent that you need a good credit score. Thank you very much for taking the time to watch this video. If you like other videos on this topic, let me know in the comments below. Or if there's any other topics that you'd like me to cover, let me know about those also. I wish you the best of luck in your business. Even though this is very trying times, I do feel that at the other end, it will be a great opportunity. So until next time, have a great day.